Mate, you've been very, very fortunate enough to have gathered a fair bit of knowledge about the gold market as well in the last little bit. And in the absence of Ainslie today, our golden girl, it would
Yeah.
be wonderful if you could give us your opinion on what's going on with that, what seemingly stalled, could I call it a stalled market on gold?
You absolutely could, and I think that one of the other reasons I covered the dollar is because it does lead us quite nicely into gold. So yeah, let's talk about gold now. Gold on the COT data, we'll have a quick look at it. Again, it's a little bit benign. It doesn't really tell us a lot. We can see over the 18-month that there's a little bit more positivity, but the 36-month is still down at the lower ebb, but nowhere near at the extreme, so it doesn't tell us too much. The 6-month is popping up, but nowhere near 80%. So I want to see 80% for me to be really confident that the gold market is going up. And when we look at the percentage change, longs have changed by negative 0.6. So they've reduced their long positions. They're reducing their short positions by slightly less, but pretty close in numbers there. So not really telling us a whole bunch. And then we open up the charts and we see that the chart throughout August does tend to rally right the way up until October. This may well still happen, particularly, after that particular meeting happens with Jackson Hole, we might start to see the gold rally take effect. If we bring in some of the fundamental aspects of this as well, the first thing I'm going to bring in is the 10-year bond yield, because there is a correlation between the 10-year bond yield and gold. Now, I just realized that that's probably not sharing. So let me bring up this screen now instead. There we go. So I can see, you can see here, during February, we saw the bond yield really increase. So, effectively people selling off their bonds and the yield starting to spike higher. This is negative for gold. So with a bond yield going higher, we tend to associate that with negativity in the gold price. But look what's happened ever since then. We've been moving quite consistently and easing to the downside. Really ever since the end of May, we started to move to the downside with the bond yield. So that would be a positive signal for gold. So we kind of got the picture starting to form. Seasonally, we see strong gold throughout now until October. The COT data hasn't said pull the trigger just yet, so we'll probably be on hold for a little while. Bond yields falling would suggest higher prices with gold. Then if we bring in the fundamental kind of picture of the dollar, because we'll be trading it against the dollar. The Fed don't know what they're doing in some respects, and I don't mean that to be disparaging. What I mean is that they are probably in a state of confusion, because the data is not the kind of data they want to see to make the next move simple for them. What we've got is an inflation spike, inflation easing back a little bit. The rate of change of inflation is easing back a little bit. We've got employment still at elevated levels. Now, what they're doing is shifting the rhetoric to employment. So they're saying now we're going to leave the price points alone. And when we look at some of the price points, core CPE, just a little bit of easing from the last print to this print. We do see that the Chicago PMI is a big spike to the upside. So that's also relatively inflationary for businesses. And the Consumer University of Michigan's sentiment was quite good. So things are showing us that a little bit of buoyancy, but maybe just a little bit of cooling off a little bit with inflation. Then we turn our eye to employment, because it's the employment picture that they're now saying that they're going to focus on. They're going to focus on the employment rate being at a comfortable level before they talk about tapering. They've almost kind of rode back on the talk about tapering. And when we look at the employment picture, the employment is currently, yes, it's fallen, but it's still relatively high. They want to see employment under 4, probably more around the 3% mark. They want the unemployment rate to be around about the 3% mark before they are comfortable about raising interest rates. So we've got to watch those employment metrics. Now, what this is effectively telling us is that the Fed are probably more on hold than they are getting ready to start to taper. And then now we bring this back to the conversation about gold. If we know that the dollar is in this kind of rangy kind of position where it's not quite sure what it's going to do, that would suggest the same thing would probably happen to gold as well. However, if the unemployment numbers don't come down, we're probably going to be left on hold with the US rates, and the positive rhetoric that we heard about a month ago has started to ease back. Bond yields falling, seasonality going up. That would suggest that having an exposure to gold to the upside would be quite sensible. If we look at the weekly chart, the weekly chart has managed to bounce away from this inverted head and shoulders. So we got this inverted head and shoulders level here, where we got the left shoulder here. There's the head, and there's the right shoulder, and we're carving that out. And it looks like we've got a relatively defined neckline along here as well. So there's the neckline there. That's what it needs to break through. The key level that I think that we probably need to take out before we're getting more bullish on gold is probably somewhere around where it's refusing right now. So if we can get a higher low around about 1820 on gold, then we would I would anticipate us coming up to the neckline at 1910, and then we'd want to have a look at that and see if it goes beyond. The thing about aiming for that neckline, possibly taking something off the table, possibly just tightening up stops a little bit, it just gives us something to aim for before we get to that neckline and see it possibly go through and not come back again. So trying to get in around about here and looking at this level to make the trade safe on the way up would be my personal preference. So I want to see a close above 1820. I want to see it come back and test this trend line on the weekly chart. I'll blow it up a little bit for you guys. On the weekly chart, all I've done is taken the high in what looks like August 2020, so a year ago today, and I've extrapolated. I've tried to touch this high here in March this year, and I've also taken the low of the end of May as well as a potential level that we need to start to break through. So I want to see a close above here, do something like this, move through this level here, come back again, and try and take the trade somewhere along this level here. Before it goes through that point, because of the slight confusion that is floating around with the Fed and some of the numbers, I'm not really that comfortable. So it looks like around about 1850 that the gold long would probably come into play, and we can really start to add some confluence areas as well. If we have a look at the trend line from the low, if it breaks through this upper line, it looks like it'd be coming back to a horizontal level line of support into a buy zone, test this trend line as well, but possibly with a little wick. Then I'd be looking for a long, and I'd be looking for a long right the way up to around about 1910 before I did anything. So so my idea right now is to wait for the charts to express themselves. If the COT data starts to match as well, then we really are aces, and we do want to then start to build a position in gold. Because it really could explode. We've talked about, Julian and I talked earlier about liquidity. This does actually start to tie back into the gold market. If we've got this situation where there's lots and lots of money sloshing around the market, which is to a degree irresponsibly invested, what do you think happens when we get to a high point? Something happens in the outside world, and then people go, I'm not willing now to pay these extraordinarily overinflated prices, but I will buy from you 10% lower. There's going to be a crash in the global stock market, and when that crash happens, the likelihood is that the best place will be in risk-off assets, and gold will fall into that particular category. So still in a little bit of a waiting game, but overall, I think we should be anticipating to go long on gold, and gold will probably go up then, Helen. Yes. You are muted.
Sorry, mate. I'm muted. Yeah, interesting. Just picking the levels, right? Everyone seems to be of the same opinion that gold will rally. It's just a matter of where and when.
Yeah, and as I say, mate, that would be my preference. I think it would be foolhardy to get in anywhere here because really this is a sell zone. You know, until we go through that that trend line, we're really in the sell zone territory, and it might well come down. It might even come and test this low down here one more time. You know, at 1770, and some gold bulls might well think, okay, you know what, I'm gonna take a punt here instead of waiting for the break, and I think that would be okay too. So coming down to test 1770 or maybe this low down here, but preferably a break and a retest would be my preference.
That entry on the weekly chart about 5 weeks ago on Trading Buddies still looking okay, right?
Yeah, I mean the way you picked this market was almost a bit unnerving, mate. Your accuracy was on the money because actually you picked this level as well as a level of resistance, which I hadn't spotted initially. So I think you're in the wrong markets by ignoring gold.
Maybe I need to start trading gold, right? Okay. Thank you, mate. Much appreciated. What are you doing with your time off?
What I'll be doing with my time off is messing about with Molly, my daughter, and I'll be researching as always. I'll dip in and out. I might even pop in to see the guys on Trading Buddies as a guest if they'll have me. And
can't stay away.
Just generally, it depends on what the time allows, really. If I've got a few moments to get into it, then I'll come on in.
All right, mate. I'll catch up with you on Skype or somewhere else, no doubt. Enjoy.
Great stuff,
and thanks for being Ainslie for a day.
Oh, no worries. I've got my wig, but yeah, not as pretty as Ainslie, but I hope